All right, topic number one. Reverse repos actually hit a high to get day again, June 21st at $765 billion. So the thing is that on June 17th, the Federal Reserve just put their award up from 0% award that they would be getting from these reverse repos, the institutions that is, from 0 to 0.05%. So that's 5 basis points. So you can see that the reverse repos today actually are at, for 1 month treasury, is at 4 basis points. For reverse repos, it's at 5 basis points. So the treasuries right now for 1 month and 2 month are at 4 basis points. That's saying that the federal government actually wants people to use these overnight maturity reverse repos. That's saying that when humans, us people in the United States, get these stimulus checks, they're doing the same thing. They're getting these stimulus checks for these institutions. And let's just say at June 17th, their award was $377 million, and 18th, 373 mil, and the 21st today, they're going to be getting $382 million in these awards. And that's just going to happen tomorrow for them with these overnight reverse repos. It's pretty absurd. I think that that it's just not right. The banks and institutions are opting in for these overnight guaranteed profits of 5 basis points. So why would the Fed raise the reward rate on the reverse repos from 0 to 5 basis points and make it more enticing than the longer expiration treasury bonds? Well, that's because the Feds are trying to help out these banks and institutions. The problem is too much cash floating around. Where could all the money come from? Well, could it be the borrowing from all the shorts that they have too much cash on hand? Because it seemed as though in mid-April, the three banks, JP Morgan, Bank of America, and Goldman Sachs, all sold off bonds worth 13 billion, 15 billion, and $6 billion. So when they have too much money, money is equal to debt. Then debt is equal to liability, and the liabilities need balance through collateral. So they don't know where to park their cash, and they're asking for a sure thing, and the federal government is able to give them a sure thing and put that 5 basis points, and they're just collecting their stimulus checks for these institutions. 68 participants, 61 and 68 participants through June 17th and June 21st. So I don't know about you, but the news is saying that during this mid-April time, the news said that they needed extra cash, which could help them pass the Federal Reserve stress test, and which would allow them to raise dividend and buy back shares later this year. I think they need the extra money to buffer them from the impending market fall, and they would rather make 5 basis points on these federal treasury bonds than make over 150 basis points with corporate bonds.
Wow.
So we could see that from the Wall Street Journal, you can see the corporate bond yields, and Josh has that up. And these yields, they could go up to 350 basis points, but they don't even trust that. They would rather just go to the Federal Reserve and park their cash and try to make their books look good. But this is just going to be a trend that's just going to be going forward.
So we have a question in the YouTube chat is what is a reverse repo?
So, reverse repo is when the Federal Reserve, which is our government, they give their treasury bonds to the institutions that opt in for money. So let's say Goldman Sachs, they have so much cash on hand and they want to get more money the next day. So an overnight reverse repo is Goldman Sachs gives, let's say, the Feds $80 billion, or let's just say $10 billion. And the Fed in return gives the institution these treasury bonds that have a yield right now, an award of 0.05%. So 0.05% multiplied by 10 billion. I don't know, what is that? Like 5 million, $50 million.
Something like
So
that.
So
More money than I
that
have.
is a reverse repo. It happens at around 1:15 to 1:50 p.m. every day, where all the institutions opt in to um, give the government money. The government gives them back treasury bonds. That is just a risk-free collateral.
Yeah, the idea is a trade, right? So the government says,
Mm,
I have this much in treasury bonds. I will give this to you. You will give us, right, this much to in capital to the bank, just like you would lend to a bank and you put your money in the bank and the bank can use the capital. The Fed kind of works the same way. The Federal Reserve is the bank for banks, where banks can borrow and lend money to. What happens is when the bank has too much capital on its books, it needs a place to park it because having all that cash is a risk to them, especially when they can't use it because they're not putting out loans. So that money just sits there. It's not doing anything. It's a liability for them. So what they can do is they can go to the Fed and they can say, hey, listen, you give us treasuries, we'll give you cash so you have cash to use for your operations wherever you need to put money. And then you'll give it back to us, and the premium we get will be 0.05%. So when you give us the money back, you'll be giving us an additional amount of capital. Meanwhile, all we did was hold treasury bonds that we may have used for collateral for something else or didn't use at all and just had them on our books. But it's a way to store capital so they don't have it on their books for a period of operation, and then for them to get that back with some kind of return so they can actually make money instead of just
some
having it make
interest the
zero.
next day.
Right.
Definitely. Definitely. And that goes into, well, before I go into our rule that's going to really just shake up the market, does anyone have any input aside from that? I feel like we covered reverse repos pretty well.
No, yeah, I think that's pretty good. You are welcome, Sarah Clack, for the example.
Perfect. So we're looking at the new rule that's going to be implemented this Wednesday, and it's the NSCC, National Securities Clearing Corporation 002. So what the NSCC is, it's just an automated system for the stock market. Before they used to do everything by hand, and everyone would be on the floor and stuff, asking for trade capture and settlements and settlement of transactions. Now they have an automated system. Well, what we didn't have an automated system for was these margin calls. So these margin calls for the brokers were always manually done. The margin calls for retail investors were usually done by the brokers. So they crack down on us really quickly. Who cracks down on the market makers, the brokers, the institutions, the banks? The NSCC does, the clearinghouse. And they do liquidity checks, and they usually do it once a month at the end of the month. Now, due to this new rule, they're going to be doing it every hour. They're going to be doing it intraday all the time. And that's going to really shake it up because they're going to have the liquidity on hand at every moment. They can't just be like, oh, well, we could wait till the end of the month and oh, we didn't get a phone call from Freddie that said they're checking our liquidity. No, they're going to now have an automated system that says, well, if you don't have the money on hand, we're going to liquidate your assets right on the spot. And that gets taken into effect this Wednesday, and it's going to change the game, especially for all these over leveraged institutions. That everyone is yelling that the whole stock market, the whole market is going to crash sometime soon. This is just another another coin in the well, and death by 1,000 cuts. This is the 998th cut, 999th cut. You know, so we'll see when the market's going to tank, but all these rules that the SEC has finally been starting to implement and take into effect is finally starting to come into effect. And we're going to see on Wednesday how this affects these institutions, because once one hedge fund, one institution defaults, it's going to be a domino effect. And these prices are going to go out of control. The market's going to tank. We'll see how they hold up, and eventually these rules are going to smooth out the playing field for all the retail investors, because we know that the institutions have way too much power, and they have all the information, like a duopoly of Citadel and Virtu. Those are two of the guys that send trades into the market, and they could choose to send trades into the market, or they could choose to hold them. They can manipulate the market any which way with that kind of power, And we're not saying that they are manipulating the market, but we don't want that kind of duopoly to still exist in this free market because it's not.
Right.
So
It's dangerous. The more powerful institutions have in the market, the more influence they can exact over a market because they just have more money. The bigger they are, the more power they have. And the more power they have generally means that more retail investors will lose. And I think the majority of investors are retail investors, but the majority of the big players are institutions. So
exactly. And now that it's not going to be manual margin calls, it's going to be less human error. Not saying that the code could not be errored. We're hoping not, but it at least takes the human component out. And
it's step in the right direction.
it's a step in the very right direction. So DTC 005 is just saying that, well, we have a stock and a borrower. We're gonna keep track of all the stocks now. And now that every single one's gonna be tagged, no more naked shorting is gonna occur, or hopefully not occur anymore because of this system. And now 002 of the NSCC is coming out, and that's just huge with all these meme stocks. Now, let's take a quick look at Apple on TradingView. And we could see that we're looking mostly at this on balance volume. Are we seeing?
Well said, Josh. Thank you.
I'm not even talking. Just want to give my insight. Obviously, I'm all jumbled up. So this is big news. So pretty much, I feel like I heard a couple things. One, these institutions are getting way more money than the actual, regular individuals getting. Inflation's going up. Pretty much. Remember we talked earlier on how this is also going to be affecting the crypto market. That I felt like really grabbed my attention. Why was that?
Okay, well, there is this, I believe it is on. Okay, MicroStrategy stock. So MicroStrategy stock is it's a corporation, and guess who owns this corporation? We know that the news of this. Well, before we get into who owns it, they just came out with news that MicroStrategy now owns over 100,000 Bitcoin, worth more than $3 billion.
Yes, I did read about that.
You want to know who
Big.
owns it? Citadel owns it. They're one of the owning partners. So JP Morgan is one of the large shareholders, BlackRock, and a lot of other institutions. They are in on this cryptocurrency. So now they're able to say, well, we got in the hike. Now we're actually able to manipulate that market as well. So eventually, we're going to want more regulations in the crypto market because these bigger guys are now seeing the potential. Luckily, for MicroStrategy, they said that their average for their Bitcoin right now is $37,000. And what is Bitcoin at right now? It's around 31,000.
31, 32.
Glad, I'm so glad you asked. Oh, that's not it.
That would be 32,682.20 United States dollars.
So it didn't drop as low as I feel like people. Okay, so the panic that happened today, I feel like was more Ethereum than it was Bitcoin. Bitcoin did not take that big of a hit. People were saying that it's going to drop down to 24,000. That didn't happen. It was coming near 30, but it quickly recovered from there. I feel like the new floor might be around 31. What are we looking at right here?
Well, actually, I'm sorry. It's actually 31.6 right now. So I would say that your floor is probably going to be at about 30 in this case. I would say is a reasonable floor because the last time it got down this low was after it's run up to 40. So I would say 30 is a floor. If it breaks through 30, you could see it.
Yeah, look at
I
that.
think maybe
So
come down to 25.
here are the floors, but as we can also see, look at the pattern to these things. I mean, the volatility is just crazy, but whenever it dips this low, the recovery is just wild, and that's kind of the momentum that drives
sell-offs.
it. Yeah.
Yeah.
If
Sell off,
I'm,
take profit, then buy in early.
I feel like I have to just like think back at what happened, when Bitcoin was reaching 60,000. People were trying to buy in at 60,000 Bitcoin. Now that it's half that price, you're telling me that you're not trying to buy in, you're trying to bail? No. And that's why I feel like we see a lot of these other big institutions now purchasing more Bitcoin.
Well, the thing about big institutions are if they continually buy large crypto asset positions, and then the price does go back up to if they look at this and they say historically there's a probability that it's getting back up above $60,000, then they're making pretty decent bets when they own billions of dollars worth of Bitcoin. My fear is what happens if it hits 60 or 75 or 80 and they decide to sell because they're like, yo, we'd love to take $30,000 per Bitcoin in profit. That would be a
Everybody's
horrendous
dream, of course.
drop in the market.
Yeah, yeah. And let me just tell you right here, it's Susquehanna Securities. That's a hedge fund. Citadel Securities owns it with 8%. Sailor Michael. Vanguard Group, people who you get your 401ks from, they're invested in them. BlackRock, Victory Capital Management, Morgan Stanley, First Trust Portfolios. These are big guys. And they were able to buy up 100,000 Bitcoin plus in a blink of an eye because they wanted to. Okay. So when you think about like, oh, the crypto market's like a free market and it's with only retail investors. No, it's getting
Not
into the
anymore.
large institutions now. And people wonder, well, we were able to judge the ups and downs more like better. Well, now you're seeing a correlation between markets and cryptocurrency. So that's where more regulations are going to have to come out in order to I mean, think about it. If they're able to use cryptocurrencies, who says they can't hide their money in crypto?
When you have a zombie apocalypse and all the zombies start biting people, they bite all the people in your group, the safest thing to do is to kill all the people that are infected, right? Because then no one else can get infected if all the infected are dead. What if these institutions get into Bitcoin, and as a result, the price movements they create start to cause broader market volatility? If I was a regulator and I wanted to save my financial markets, especially during this weird time of supply chain shortages, but red hot markets, trying to maintain a recovery, would I opt to strategically punish these companies, or would I do something more broad, like try to limit the ability for crypto assets to be traded entirely to stop the threat as a whole? Because the threat is right now there's all this volatility, but it hasn't caused any major market crashes. If it does, at what point does the regulatory body start to say this could be a material danger to the stock market, and can it be allowed to exist? Because China's cracking down on some of their companies and even telling them, hey, listen, we don't even want you to take payments or trade in this at all. We want you to start limiting your exposure to crypto assets, not just mining, but your actual operations. I think I put a link in one of the articles in there that talks about, urges Alipay banks to crack down on crypto. So to actually stop, using it as often, make sure that track it a little more effectively. So it's going outside of just now mining. It's starting to go into, limiting the actual asset itself. So I wonder what happens if people did own all those big positions and sold them and caused all that market volatility, prices start dropping and going back up, and that volatility starts to permeate through the market and affect people's portfolios. What regulators do,
And I feel so. I was talking to Jeremy earlier, and he kind of enlightened me that a lot of the things that are happening to the stock market, to the crypto market, is due to the stock market and how these large institutions have what the blind margin calls. I don't want to just start throwing out terms here, but that due to what's coming up, because of the rules that you've mentioned that are going to be put into place, the new regulations, this is now affecting our Bitcoin market.
Well,
Right.
there's a lot of correlations that have been made to the market and the crypto market. So we will need to go into that deeper another time, definitely with more charts and everything. But there are definitely now more. There's more of a correlation there than there was before, and it's these institutions. They got in the game, and they're just like, well, we could use any of our capital that we have in excess, whether we, put it offshores or anything like that. We don't want to put it into dark pools anymore. We're going to put it in the crypto market, and we don't even have to tell the government what we're doing. We don't even have to put it in our tax filings.
Interesting, because I feel like there's been a lot more regulations coming about in crypto due to these allegations, because currently that's what they are. And I feel like the FBI has proven its resources in order to track some of these funds. The whole point of, I feel, cryptocurrency is its transparency. Before there was the argument that this was all black market transactions, but then they found out that it was less than 3%, 5%, and so to be able to hide money or to do it in such a way that's going to benefit, shoot, I'm curious. Heck yeah, how do I get into it? But at the same time, this is also kind of an area that I feel is becoming less gray, and with more institutions jumping in, absolutely more regulations should be coming about, because these guys know exactly what they're doing with the money. Crypto is such a brand new market. You have guys like me who know diddly squat, in stock market compared to the little knowledge I have of, the crypto market. And here I am finding out that large institutions are messing with my cryptos. What the heck? I thought these were two separate markets.
Well, it is just the market. Anyone can play. The reason big institutions didn't get involved is because they had their doubts that cryptocurrency would ever actually be
Survive.
meaningful. And then all of a sudden, and it doesn't have to be that it'll be the long term. These companies don't necessarily have to be making bets and saying this will be a currency. No, their bet is, hey, there's a market and people are willing to pay $32 to $60 thousand for a digital asset that is not a currency. They're willing to pay for currency that isn't really a legal tender currency. Before we even know if it's actually going to be effective, people are pricing this in this early on. So it doesn't matter if this becomes a bubble and pops. It doesn't matter if cryptocurrency becomes valuable, becomes a currency, or it just disappears altogether. It doesn't matter if it gets banned. What they're capitalizing on right now is the opportunity to make a lot of money in the volatility of Bitcoin. They're looking at the short term within the next few years. I don't think I'm sure some of these companies are betting in the long term, but I don't know how many companies or funds especially are investing in Bitcoin because, they think of it as a long-term asset, right? They're actually making an investment because they believe in the long-term goal of crypto. I think they're speculating that the price is going to go up and that, all this news of 100K within the next 2 years will be true, and that they'll make a ridiculous amount of profit, and someone will write a book about them, and they'll go down in history as being the smartest,
The
traders in the world.
entrepreneurs of crypto as institutions go.
There's going to be, I tell you, after all this is done, there's going to be a series of books that are just going to write about the madness of mankind.
Yeah, and
the amount of money that we've been spending on this stuff.
First excerpt's going to be like, yeah, I saw a guy in Arkansas, lived in the middle of nowhere, became a millionaire. And I said to myself, why don't I just invest in that?
So this
And
guy
that's how
bought
institutions came into play.
They bought this thing called a Inu coin and became a millionaire. So I sold my house and my family, and now I'm a millionaire too. That's gonna be like the opening story.
Oh,
You're like, what are you talking about? What do you use it for? Nothing. But I made $1 million on it.
Yeah.
And you know
And now I
why?
wrote a book.
And they made $1 million not because they did anything, but because other people in the market bet that this coin would go a different direction. Because the only way you make money in the market is if people lose, right? It's a zero-sum game. Money isn't produced; it's traded. It's like matter in the universe. You know what I mean? Like the money just gets moved around. So if you become a billionaire, That means a billion other people have lost, X amount of, or a collection of people have lost X amount of money equaling $1 billion in terms of losses somewhere along the line that passed on to you.
Yep.
Because of the bet went the other way, or just brokers had that money because they took it from other bets and they put positions on, and market makers, etc.
Yeah. Well, let me touch upon this chart really quick. Do you have it up yet, Josh?
Yep. We're good to go.
On balance volume indicator.
So we're looking at Apple first.
We're going to look at Apple, and this indicator on the bottom is used in technical analysis to measure buying and selling pressure. So you can see in Apple, when the indicator is at a high and it starts going down, that's more selling pressure. Then when it goes up, that's more buying pressure. And you can see the correlation in the chart right there of how this indicator works. So, Apple, you see the buying pressure, you see the selling pressure. All right, everything is good. Now let's talk about where these rules that the SEC, DTC, all these clearinghouses, and everyone's trying to put into place really quickly, and for what reason. And let's just look at GME right now.
So this right here is a normal stock. This is how it transitions. This is a pretty typical basic looking chart, right? This is what to expect in most charts.
Yep.
Yeah.
Now, what the heck is this? It just goes up and up.
It goes up and it's stagnant, and it's supposed to signify buying and selling pressure. So you can see when it was at a low, it just started going up, and then the first drop occurred, but no one sold. What is that called? Manipulation, people. That's called naked shorting. That's called buying deep in the money call options and exercising them right away to make synthetic shares and having that be the only selling pressure. That's called a lot of fraud. And then let's go on to another hike. It goes up again, and you can see the on balance volume, that is buying pressure, and then it goes stagnant, but then there's another drop, and then it keeps going. And now there's like a little selling pressure going off that second drop, and then it stayed above 1.3 billion, and now it's back up at 1.4 billion. So you can see that the on balance volume technical indicator is showing that this is a highly fraudulent, manipulated stock. And all these rules that the SEC is in placing right away is because of these meme stocks. I'm not saying to buy it. You don't risk money that you can't afford to lose, and do your due diligence, take what you will from it, but this is going to be one stock to really keep your eye on.
And as we could see here, as we look at a normal Apple stock, anytime the price rises, you see that it follows this chart. Anytime people are selling big, it follows the same chart. People are selling. Now this looks like it makes sense. Big drop. And so everybody's trying to sell. Now we go back over to GME. Oops, let's reload that one. Really? Now you go to Apple? Alright. So we go over to GME stock and GME. Look at EBB.
General Electric, people.
And so what we're looking at is, look at this big, we see the climb, right? Everybody sees the climb. That makes sense here. Now, it looks like there's a sell-off, but there's no dip here. And then look, it increases again. That follows the chart, and then here's a drop in the price, but as we can see, no one's selling. Nobody's selling through this whole part. And so you're telling me that this volatility is due to naked shorts?
Yep. Telling you they're due to naked shorts. They're due to price manipulation through dark pools. They've been trying to manipulate this stock this whole time. Failed to deliveries have been hidden through call option strategies, through option strategies. And these rules are finally, like DTC 005, that's going to be able to mark all the shares and see where they're at, how many are out there, how many are over shorted, how many are naked shorted, how many of these institutions have just tried to bring this brick and mortar company, GameStop, into the ground and short them into oblivion, into bankruptcy, and then just collect a sure profit, because that's how they saw it going until somebody caught this on their radar. And one of the guys was Michael Burry, a guy from 2008, hedge fund manager. He tweeted, "Hey, I have these stocks in GameStop. I'm recalling them. They're saying it's going to take at least a month for me to get my shares because they can't locate them."
Right.
You know, there's all this manipulation happening, and I'm glad the SEC, though they've been dragging their feet, have finally brought out rules to, help out this situation, to get out all the guys, and we'll see how many people go to jail, because I'm expecting a lot of people to go to jail, but there's only going to be like one or two
No
guys.
one is going to go to jail. I don't know why everyone thinks this happened. In 2008, when they came out and said, yeah, our models are shit, and yeah, we all just game the system, they let Lehman Brothers fail. And then they realized we can't let anybody else fail. And then when they bailed everybody out and the executives all got pay raises, all the people that orchestrated this from the top down, that said, we are doing this to make lots of money, you will continue to do this, they didn't get punished at all. And I think that if the SEC really wants to actually do something besides be, little more than, the UN with some actual regulatory power, they should start saying, if you're going to play these games and commit these types of frauds, and you're going to move this kind of money illegally, when we catch you, we're not just going to slap your company on the wrist so that you can use your ridiculous cash reserves to pay your fine. No, we're going to fine the company a stupid amount of money. Okay, we're going to fine them. We're going to make sure it hurts. We're going to make sure the companies know this is not something that you should be allowing to exist. It's not enough to have, the CFO signs their name on pieces of paper to let them know, hey, our financial statements, I put my name on it, so I risk my ass. Okay, that's fine. But then you get into the actual world of trading. You need to slap these companies with heavy lawsuits, not just a percentage of their gain, okay? And then you need to come after these individuals personally. You need to say, we're going to retract your earnings. We're going to take away your compensation. We are going to take away collateral. We are going to take away at the asset valuation that you have. Why? If for no other reason, you can say all the laws you want. This needs to be done legally, of course. They need to formulate a set of rules and laws to make sure that if you want to play this game and you get caught, you're going to have to worry about if you can continue to pay your bills. You're going to have to sell your home. You're going to have to feel this. And other people are going to look at you and you're going to be made an example of. Why? Because if I don't pay back my student loans, the government's going to take my earnings without my permission. They're just going to take it back whoever they want, drive me into bankruptcy. They don't give a shit. But for big billionaire hedge funds and the owners and the big banks that want to play these games where they're living, where they don't have to worry about debts and issues like that, they can play these high-stake games and really be like, all you're going to do is slap me, hand on the wrist. No, you're going to cut their hands and feet off, and you're going to leave them on the floor. And you're going to let all the other bankers look at them. Yeah, I know. We have this is the thing. When it comes to the financial system, this is why it's tricky. They know they won't get in that much trouble because their businesses become intertwined in the financial system to the point where if you let the businesses fail, the economy is going to crumble. And they know that. So they're like, yeah, listen, we'll do this, but you really can't punish us because legally our liability is limited to the company. So you can't come at me personally. And our companies are huge portions of the economy. If you get rid of us, that's going to cause a real problem. And you don't want to look bad because everyone's going to hate you for that. They're not going to hate us. So you say, sure, we're going to hit your company hard, but not destroy it. But we're going to come after you personally. And we're going to take your earnings. We're going to take the things that you've made. We're going to take your stock packages. Your family's not going to be able to live so comfortably. And that is going to take a ridiculously long legal battle. And that's going to have everybody up in a tizzy because everything is connected. Everybody knows everybody. Everybody funds everybody's campaign. So I don't think anybody's going to go to jail, but I think a lot of people should. And I think more than that, than just jail time, because, you can go to a pretty comfortable jail. You know what I mean? Not all jails are the same. You need to take their earnings. You need to take back all the money that they made and say, we're going to take 75% of the stuff you made over the last couple of years. And we're going to make sure that you understand and other people understand that if you want to play this game, you're risking your own personal, your own personal skin in the game.
And we got 45 seconds left before the Zoom call ends on us.
We know.
But really quick, there is a poster child that is getting sued right now by the SEC, and they are getting all their earnings that they made from the trade, from the naked shorting. They are getting that taken away along with a fee. So hopefully they won't be the only ones to get that kind of fee. Hopefully, that's the standard for all this manipulation in the market. So we'll see. We'll see what happens.
Kill 'em all.
And with that, we will
Kill 'em
be right back.
I think people hide behind law and they hide behind their companies. They hide behind all these shields. And I mean, I'm all about personal liability because I'm personally liable if I fuck up my job. I'm personally liable if I don't pay my loans. I'm personally liable for all the shit in my life. And these people can commit fraud at levels that are affecting hundreds and thousands of people, affecting companies. And no, like I don't care how people might look at that and say, oh, that's ridiculous. Like, no, these people, they should be punished. They should be able to go home to their families and say, like, we can't afford this house.
Yeah. You
We
want
can't
to hear
send
something
everybody
ridiculous?
to the best colleges in the world
It's
because I fucked
JP
up.
Morgan, whenever you over withdraw, if you bank with Chase, they will give you a $30 to $35 fine if you overdraw on your
Right.
account. They messed up, and guess what they got? They got a multi-billion-dollar bailout.
Yeah.
That's what they get.
Yeah, they get, and I understand this, and I agree with the bailout as long as where the money goes. If the money goes to backstop the losses and into the business as for the business, I agree with bailouts. But when the money starts going into the executives' hands and they start being like, all right, we're going to shave a little bit off. Here's a couple bonuses. We'll make sure we can pay
Exactly.
your compensation packages. Fuck that. I don't understand why that. And they sit there and they laugh because they're like, we'll keep getting away with it. You need to hit them where it hurts and make them realize that you're no longer safe. You can't play this game. You want to play, you play fair like the rest of us, or we come after your personal earnings. And why? Because you're committing fraud, because you're lying, because you're cheating. And that's just, you have to show that you're not going to stand for that. SEC needs to really step up and break ties with all the people they have connections to and really kind of stand out and be like, we're a regulatory body that's independent of influence, and prove it. Because if not, the SEC is nothing more than a joke. It's nothing more than a League of Nations with very little power and influence or ability. So
Exactly.
SEC, get your shit together. Do your job. Do your fucking job. And get us
So
that
that we
everybody
can
has a
have a
chance to make
fair
money.
market.
We just
So
want to
that's
make
what we
money.
want.
I want all retail investors to be able to step into the market and feel like that what they're stepping into is a fair place to invest, not in a sea of these giant super armored technology sharks shooting lasers while we're in little rowboats with sticks and we're like hoping for the friggin' best, but we can't control anything and the waves are 50 feet high.
Exactly. We need to stop this other pay for order flow brokers. We need a fair market where we have our margins, our bid ask spreads, and we could get filled at great prices because the increase in competition just increases the ability for retail investors to get in at better prices.
Right, and I think it's interesting because in 2008, right, all the rating agencies, they were, it's their job. It's their job to make sure that the products that are being sold are rated fairly. But they had a problem. The companies pay for the ratings. So if you don't give me the ratings I want, I'll just pay a different rating agency to do it. They're like, no, 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 no. We'll give you the ratings you want. I mean, what happened to them? Where's their personal liability? And they say, oh, it's not fair to the people. It's not fair to the employees. What are we going to do about them? To hell with them. Anybody that takes part in this willingly, and I'm not talking about the bottom level guys. I'm not talking about the people who are like, listen, you do this or we'll fire you and hire somebody else. I'm not talking about them. Okay, they're just doing their job and they're in a position. I'm talking about the executives, the people with the decision-making power. They need to be removed from office. They need to be taken from their post. They need to be punished. If you're not going to punish them, then what are you really doing? What message are you sending? They're just like, oh, they'll make news stories and they'll say they hate us, but I'm still a millionaire, so I don't give a shit.
Oh no.
Yeah.
You know,
Oh,
make
no.
sure they're no
Exactly.
longer millionaires. Put them back in the middle class level income bracket. You'll see very quickly that
Have
hedge
them
funds will
work
start
at
playing a
Pizza
different
Hut
game.
really quick and make them know
Right.
what an
Hop on.
actual
Yeah.
dollar
Would you
is
like?
worth.
Would you like French fries with that, sir? Like, yeah. Good luck to you.
Yeah,
Yeah, you like
exactly.
that? You like that?
Trade in like a Bugatti for carpooling in a minivan. See how you feel after that.
DoorDash.
See if other hedge funds are like, I totally want to keep doing this. Why? Because look at Jimmy over there, huh? He rides a bike to his McDonald's job now. He used to be a millionaire. Yeah. Good luck to you.
Right, and then they could write a book afterwards.
Yeah, my terrible mistakes, and
His-
we'll use it as
his
we'll use it as firewood.
His
in the
recovery back
apocalypse.
back to the top.
Right. How I made it back from being nothing. So yeah, definitely SEC. Do your job, man. Seriously, do something.
Do your thing. Okay. Wow. There's definitely more to talk about this. We're going to be talking about it probably up until Wednesday, and then Thursday we're going to see pretty much the ultimate results of the implementation of the new rules, the new regulations. And so
And we got hopefully many more in the future, because if this is the limit of the SEC is doing, like if they really want to do this, they should have a lot more coming down the line. You know what I mean?
Yep.
Like much bigger changes.
sounds
The
good.
problem is laws and stuff. So, but yeah. So
Wednesday, we're gonna see some new rules coming out. In the following weeks to come. I'm excited. It's gonna shake up the market. Russell 1000 welcomes GME this Friday, June 25th. And what else is coming out between now and Friday? The Pentagon's UFO report. So
Oh,
stay
it's
tuned
the
for
end of the
that.
month. You
Yeah.
know
all
what?
right, we're finally gonna see what the government. I'm telling you, it's a CIA thought experiment.
They've taken their
telling you
time
that-
on this.
Yep, they're waiting for the very last moment to drop that report. UAPs. It's not even
Unidentified
UFOs.
aerial
It's aerial
projectiles?
projectiles. Yeah.
something like that. Unidentified. It's like shit. We don't know what this is, but we're gonna tell you what it is.
They wanted to take the words away from the tinfoiled hat wearers.
Right, and you know what's funny? If they really are UFOs, what are they gonna tell us? So if you captured a UFO and studied it, no, then how the fuck do you know? It moves really fast, but it's definitely made from Earth.
So
It
you've
defies all
heard of
laws
this
of physics.
You've heard of the
Definitely made it
scientists who do research on these spacecrafts, right?
I no, I don't. I don't
Really,
think
there's
we-
a
I don't think we
whole
hear a lot about
documentary.
that.
There's a person who
Really?
said he's from that like specific group.
Are you talking about the
And,
60 Minutes interview?
This guy came out. I feel like his first name is David something.
Because like, don't get me wrong, they may be true, but when it comes to something like this big, I'm gonna take this with a bucket of salt. You know what I mean? Just like dump it all over the place. Like,
Yeah,
Like, they're really gonna have to verify.
There's going to be a lot of interesting things because they're not talking about like, hey, is it a UFO or isn't it? No, they're even going the extra mile of saying, are these other dimensional beings coming into our dimension?
Yeah, they're not even talking about like from outside of space. They're talking about aliens within our own space, just
How would
different
you-
dimensions.
How would you? I don't know. How would you even measure that? Like we're like we don't even know if those other dimensions exist, but we're like
Oh
that's
my-
definitely the seventh dimension wormhole, guys. Like how do
Yeah,
you know? We can't
exactly.
test it, but my eyeballs they tell me seventh
Yeah.
dimension.
So-
I can't wait to hear it.
Okay, so this is just a small plug-in, but for everybody who's interested, it's Bob Lazar. He was a
Bob
person who pretty much came out and said that he used to work for. And here, let me just throw my quick Google search
born
up,
in 1959.
just so you guys
Yeah.
see what I'm looking at.
Was he the guy that just he built a rocket ship for his car on his car? And
Yeah.
then he got like
Yeah.
he got recruited.
Yeah. So he says that he was taken to these secret sites, that he was given, that there was multiple crafts, that there was a number of engineers that they'd bring in, top guys, and what they're trying to do is they're trying to reverse engineer these spacecrafts, and every person, each engineer had a specific part. Not all of them were working on the same component. Like they didn't just say like, oh, here's the spacecraft, figure out everything about it. No, one person figured out what's the anti-gravity mechanism on it. The other person was going to figure out, okay, what's the material made from it? And all these groups were separated. None of them were allowed to talk to each other. And he claims that at one point, they're each in hangars, and that all the hangar doors one day were just all open. He was able to see just, I think it was like less than a dozen, but all different types.
Wikipedia says he has criminal charges for pandering in the trade of illegal goods.
Ah, pandering. I love that wording.
It's such a soft word.
Pandering.
He's
Pandering.
I mean, because you have to understand this. If UFOs actually exist,
when
the
UFOs
United
exist,
States.
no.
So I mean, I do think there's intelligent life out in the universe. Do I think that they are flying at at these speeds and coming to visit us? No. I mean, if they've been here this long, why would they just come and visit? If they can easily outflank and maneuver any military asset that we have, I feel like we would be easy pickings for them to just come on down and be like, let's go experiment. They found batteries in Egypt in the pyramids, and they believe that based on some of the drawings that aliens had visited the Earth before, given them the ideas, given them assistance, or given them the technology to make certain things, and then they left and never came back. So, but I don't know. I'm gonna have to see the evidence and scrutinize the hell out
That's
of it.
gonna be a long segment.
That's
and
gonna
I
be
can't
one of our
wait.
biggest videos because I'm ready to nerd out. I'm holding back right now, but we have 1 week, a little over a week. What day are we on? 21st.
Well, it's the end of this
21st.
week. End of this week, it is going to drop.